the hidden mechanics of global finance. But more importantly, we're looking at how to protect your hard-earned savings from forces you might not even realize are in play right now. If you want to make absolutely sure the wealth you're building today actually keeps its power tomorrow, okay, let's dive into this. Do you ever get that sinking feeling? The feeling that the money you've securely tucked away in your local bank is just somehow doing less for you globally than it used to? Well, you're not imagining things. We're actually dealing with an invisible antagonist in our financial story today. It's this silent force that might literally be shrinking your safe savings right under your nose. And the crazy part? It happens without you ever touching a single penny. Let's look at two totally different approaches to wealth preservation. First up, we have Ravi. Now, Ravi does what most of us consider the responsible thing, right? He keeps his life savings in a traditional local bank fixed deposit. To him, this feels incredibly secure. But then we have Rohan. Rohan takes a totally different path, building what the source material calls a US tech hedge. Now, what's really interesting about this comparison is figuring out who is actually safer at the end of the day. The reason their destinies diverge so sharply comes down to one core macroeconomic concept: currency devaluation. This is the invisible wealth killer. Basically, it happens when your local currency loses value on the global stage, which silently shrinks your actual purchasing power over time. Now, Ravi, he's completely unaware of this dynamic. He thinks he's winning because his local bank statement shows his balance going up, but he's totally blind to the fact that this force is quietly eating away at his life savings. Historically speaking, ever since we moved off the gold standard, practically every fiat currency has steadily lost ground to this silent erosion. It's like an unrelenting tide. And this brilliantly illustrates the trap. If you measure Ravi's wealth by local paper gains, his strategy looks like a massive success. In his local currency, his wealth appears to be growing steadily. But the grim reality hits when you adjust his wealth for the global stage. His actual global purchasing power? It's alarmingly low. He is losing ground without even realizing it, basically trapped in this complete illusion of safety. But this brings us to Rohan. Rohan recognized the fatal flaw in Ravi's traditional plan. He knew that simply parking cash is like trying to hold water in a leaky bucket. You literally have to actively fight back against currency devaluation. So he went ahead and designed a structural shield for his savings called the double benefit strategy. It's specifically engineered to turn this invisible wealth killer completely on its head. So let's break down exactly how Rohan's strategy works. It really relies on a two-part mechanical advantage. Step 1, he invests capital in US tech giants, basically buying into the exact companies that are actively driving global innovation. Step 2 is where the absolute brilliance lies. By holding these assets in US dollars, he automatically captures the dollar's appreciation against his local currency, the rupee. He is actively utilizing two completely distinct compounding forces at the exact same time. Let's move on and see how this builds into an incredible shield. You have the baseline growth from the US tech stocks themselves, right? But then that's added to the purely financial gain from the dollar strengthening against the rupee. Stacked together, you get this turbocharged portfolio. It doesn't just protect Rohan's purchasing power, it aggressively expands it on the global stage. It's a real game changer. Now, you're probably sitting there asking, well, why is this happening in the first place? Why does the dollar strengthen while local currencies weaken? To truly get that, we need to step back. We kind of have to transition away from the individual stories of Ravi and Rohan for a second and zoom way out to look at the massive macroeconomic forces driving these currency shifts. We're talking about the historical architectures of global wealth here. And that brings us to a fundamental concept from our source material known as the big cycle. This is basically the historical repeating pattern of world orders shifting, which inevitably leads to local market structural failures. It's an absolutely vital framework to grasp. See, currency devaluation isn't just bad economic luck or some temporary glitch. It is a highly predictable historical pattern tied directly to shifting world power dynamics. Every major empire, from the Dutch to the British, has seen this exact same cyclical currency shift. So every major cycle goes through these sequential phases. First, you have phase 1, the rise. This takes decades to build, eventually plateauing into phase 2, the peak. But as history shows us, that peak is inevitably followed by phase 3, the decline, which ultimately culminates in phase 4, structural failure. Think about it. If your money is purely locked into a local system during a decline phase, it is highly vulnerable to systemic shock. So, the crucial point is, why is Rohan's US tech hedge the ultimate rational response to this massive macro cycle? Well, because it acts as a robust safety factor. It specifically protects your savings from those super dangerous late-stage local structural failures we just talked about. By anchoring a portion of his wealth in dominant global tech and, frankly, the world's reserve currency, Rohan completely insulates himself from local economic turbulence. Actually, the source material uses some very intentional phrasing here. It explicitly states to use U.S. investing as a safety factor against local market structural failures. Notice that language. It doesn't say use it to gamble or, to chase speculative overnight returns. Rohan's approach isn't some risky bet. It is fundamentally about structural safety. It's about guaranteeing his life savings remain globally intact, literally no matter what stage of the cycle his local economy happens to be in. Which leaves us with a highly critical question for you to ponder as we wrap up this explainer today. Which side of the big cycle are your life savings sitting on right now? Are you helplessly saving in local fiat, just letting invisible forces erode your future global purchasing power, exactly like Ravi? Or are you structurally protected,